Welcome to iGlobal Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me to this new week. Started with the Australian dollar. Well, the market is still questionable whether we can take the challenge lower after at least 6 or 7 times towards this downside has rebounded significantly well from 76.30-35. Overall, though, from the 4 consecutive challenges over the since the early last week after the Easter, is that we are still pressuring the upside after recently printing a high of 76.25. My view is still to sell into rallies and up towards this trend line, as you can see, that holds around 77.45. Is the bears are still comfortably happy to sit there. But there is a little bit of divergence coming through, so just be careful if you're trading from the short side, as we may see one more test later in the week towards the top side, but still confined to the range of 76.30 to 77.45. Now on Friday, we did get the slightly upbeat employment data from the US, with the non-farm payrolls coming in slightly lower than forecasts of 188,000. And printed a low of 1,003K. The previous month, however, was more upbeat at 326,000. The unemployment rate missed the 4% forecast as viewed, and instead came in at 4.1. The average hourly earnings, however, was in line with the forecast at 0.3%. In spite of the unemployment data, is the fact is that the dollar index is still slightly lower, and as you can see from the euro, it has found a bit of a upstep from that 121.80 to 122 figure support. In view of the current pattern, I'm a little bit cautious to the fact is that the dollar index is now beneath 90 and trading around 89.80, back to the previous levels of last week. If we do see a break to the upside, then it's got to clear 122.95 and still challenge the 123.35-55 level. Failing to do so, then we should see in the next 12 to 24 hours a little bit of weakness coming back into the market, with immediate support seen at 122.55. Well, dollar yen, I'm a little bit cautious of my call now towards the top side. Nevertheless, dips are still a way to go in this strategy that I'm holding. Towards 106.55 should find support, and from there another rebound. And if we do eventually take out the level of the top side of 107.70, this would actually give further leverage to 108.55. The pound did briefly look underneath 140 handle on Friday and printed a low of 139.82. Now, from the given pattern, I do expect to see a little bit of weakness, but as you can see from the support, which is the broad trend, if we have a look here, very, very strong, is the fact the market has recognised this level once again. And if we find that the support level does hold around 139.30-55, then we could see into this week a test up towards the region of 141.40-55 and reassess from there. Well, from this posted gravestone doji, it was a bearish reversal signal. Nevertheless, the market only failed to continue on to the downside of 24 hours before turning around. Now, the market is a little bit weak again for the start of this week, and therefore could see the challenge on the support at 27 with the resistance seen at 35. But the trade wars will continue to ignite the movements, and being a safe haven currency, the market will probably recover but not break out of this broad range, which is still 1,300 to 1,360. Silver outlook hasn't changed, and over the past few days it's still trading in the 1615 to 1685 parameters, as you can see here, like gold. For the start of this week, though, I do see a little bit of weakness coming back into the pattern, therefore could see a move back towards the 20 region, but still a buy. Overall, I do expect to see a rebound, but immediate resistance seen at 45.50, but a cap at 85. And a round off with oil, the market did plummet on Friday. Now, the reason behind that was the fact that we did have the General Electric Baker Hughes Energy Services. They reported on Friday that the oil drilling rigs rose by 10 to a number of 808 last week. That was the highest number since March 2015, underscoring worries about rising US output. Do take a note, if we do break this broad trend that I'm just holding here around 61.5, the next target comes in at $58 a barrel, and that's where I'll be putting my target in the coming days if we see a move sub 61.5. Resistance on the day, seen at 62.45. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report, and I hope you enjoyed a great start to the new week.